If you've ever been rejected for any type of credit, from a credit card to a mobile phone contract, you'll appreciate just how important a good credit score is. But what makes a good credit score? Well, that partly depends on who you talk to. In short, there are three main credit reference agencies: Experian, Equifax and Callcredit, all of which hold information on how well you've managed your past debts. They also show whether you're on the electoral roll, any court records, previous addresses and fraud data, and then arrive at a total score. When you apply for credit, the lender will look at the information provided by at least one of these agencies and use it along with its own credit rating system before deciding whether to accept your application and, if so, how much it will lend you. The good news is, this means there's no universal credit score, nor is there a credit blacklist, so rejection from one lender doesn't necessarily mean rejection from another. The bad news is that multiple applications, not to mention multiple rejections, will have an adverse effect on your credit score, so it's worth checking your credit file before applying for credit. It's also worth bearing in mind that the best deals are saved for those with excellent credit scores. The Consumer Credit Act gives you the right to obtain your full statutory credit report at any time at a cost of £2 per report, so the total outlay should be no more than £6, even if you want your report from all three agencies. If you spot a mistake on your file, you should contact the relevant agency and ask for a notice of correction, explaining why it's wrong and supplying any appropriate support and evidence. And this information doesn't stay on your credit report forever. A missed credit card payment, for example, will probably stay on for about 3 years, while something more serious like a county court judgment or a bankruptcy will hang around for about 6. If you only make the minimum payments on your credit card each month, or if you've maxed out all your credit lines, this will also have an adverse effect on your score. It's not all about poor debt management though. If you've never borrowed money in the past and have a very limited credit history or none at all, this can also count against you, as it gives lenders very little to go on when making their decision. It still goes without saying that the best way to improve or maintain a good credit score is to manage your debts well, don't miss monthly payments and stick within your credit limits.